Hey everybody, what you're about to see is a class that is available on the Payments Professor website. This is a class that goes into detail on all the different rules changes that are happening in 2021. If you'd like more, go to paymentsprofessor.com. Hey everybody, are you ready to take the ache out of ACH rules changes and updates? Could you imagine a world where ACH had no limitations on when items could be returned? That's scary to think about, isn't it? Thankfully, we do have limitations, and there have been some changes made as to when the limitations can be made. So starting on June 30th, 2021, you're going to want to be paying attention to this one, because starting on June 30th, 2021, limitations on warranty claims goes into effect. This means that an RDFI will have the ability to make warranty claims limited to, here we go, 2 years for consumers and 1 year for non-consumers. That's a big deal. But it's also important. Why are we doing this? Well, the purpose of this new rule is to limit the length of time that an RDFI is permitted to make a claim against the ODFI's authorization warranty. It's gotten confusing at times within the network, and this is going to help eliminate some of that confusion. Again, though, this rule limits the length of time in which an RDFI is permitted to make a claim against an ODFI's authorization warranty. For an entry to a non-consumer account, that would be a business account, it's actually pretty simple. The time limit will be 1 year from the settlement date of the entry. That is what we see in UCC 4. It's a 1-year rule that applies to checks and items charged back to bank accounts, again, for non-consumers. So think of it as aligning the ACH rules with UCC 4 for non-consumer accounts, business accounts. But let's move on to consumer accounts, because with consumer accounts, it's a little different. Okay, it's a lot different. For an entry to a consumer account, the time limit will cover 2 time periods. The first time period is a 95 calendar day time period from the settlement date of the first unauthorized entry to the consumer's account, and will always be covered, or, let's simply put it this way. We're going to cover the first 95 days. We got that one. Got it covered. You ready? It's covered. Let's move on though. See, this is where we see the ACH rules actually align with Regulation E. As this period, it covers the time period in Regulation E in which an RDFI may be liable to a consumer for errors for, 60 days from statement date. Pay attention if it's statement or settlement date. It makes a big difference. And that's 60 days from statement date that shows the first error. So that covers items within the first 95 days. And if you didn't follow the math, don't worry. We're going to cover that 95-day period. That's what's most important here. But the time period for number 2 is for entries that actually fall out of the 95 days. And this time period is for 2 years. Number 2 is 2 years from the settlement date of the entry. I said settlement date. That's from settlement date. So it's simply 2 years from settlement date. This 2-year period, it exceeds the 1-year statute of limitations that we see in the Electronic Funds Transfer Act, where we get our Regulation E claims from, and it runs from the date of the occurrence of the violation, which could be later than the settlement date of the transaction. Just be aware of that. Something we also see in Reg E is special circumstances. Wow, they can really get crazy too. And the Nacha rule also allows for what is being referred to as extenuating circumstances. And that is where a consumer is delayed from reporting an error to their financial institution. I gotta tell you, I really think this is a great rule. And I think so because it helps to address friction points that have been in the industry for many ACH participants, really for a long time now. It helps ACH originators by limiting the length of time that an ACH payment can be charged back. And it helps ODFIs by providing greater certainty regarding long-term return of transactions and the associated credit risk that can go along with it. And that is not all, because it also helps RDFIs by providing greater clarity regarding situations in which claims are allowed, and helps RDFIs to establish reasonable expectations with their account holders. A great benefit of this rule is that the ACH origination by ODFIs and originators, well, it gives us more certainty of liability. And that certainty of liability, that's definitely going to be a benefit. See, this rule will shift liability for some older transactions from ODFIs and originators actually over to the RDFIs and receivers. And they need to do things in a timely manner themselves. There is a possibility, and it's a small possibility, but there is a possibility that a small increase in risk where there will be some circumstances in which the RDFI could be liable to its customer without the ability to be able to collect from the ODFI because they're not within the rule. But we already have many situations today where RDFIs have to do what we call write-offs anyway. And there is no doubt that having two different time periods for entries to consumer accounts is going to probably cause some confusion. I know that may happen, but we got to know the rules. Always go to your payment association if you have questions. Again, this rule changes limitations on warranty claims. For an entry to a non-consumer account, that's a business account, it's pretty simple. The time limit will be 1 year from the settlement date of the entry. That's it. Business account, non-consumer account, 1 year from settlement date of entry. But for an entry to a consumer account, there's two different time periods. For a consumer account, the first time period is 95 calendar days from the settlement date of the first unauthorized entry to the consumer account. It will always be covered. And the time period for number two, well, that one is for entries that are outside of that 95 days. And that time period is 2 years from settlement date of the entry. Whoa. All right, make sure you get those time frames correct. And you know what? There's still quite a lot happening in the world of ACH in 2021. And the Payments Professor is here to help you take the ache out of ACH. And it's time we move on to something meaningful as we see the modernization of ACH. But that's in the next class. So for now, class dismissed. So what did you think about that particular class? What did you think about all those new rules and new updates? And if you missed part of the class, you can always go to the Payments Professor website to learn more about what's happening. We have all kinds of courses out there about all kinds of different things, electronic payments, and we are here to serve and help you. We even have some things that are out on our YouTube channel. If you want to go there, please subscribe if you do go there. Or if there's a class or maybe a course you'd like to have created, you can always email me, kevin@paymentsprofessor.com. And like I said at the end of that class, I got to say it again, class dismissed.